Hello, everybody. Hope you're all doing well. It is officially the second half of January here in 2022 now. We now have a couple weeks elapsed to see how things have shaped up to kick off the new year. And thus far, we're continuing to kind of see a ranging pattern for the top two assets. Bitcoin sitting anywhere between 41 to 44K over the last week or two. Ethereum sitting around 3,100 to 3,300 the last week or so. And this ranging is causing, of course, a bit of stagnancy. Crypto traders like their action, like the price movement that they can rely upon. And Bitcoin and Ethereum have not really been providing that the way they were for much of the last year or 2 years even. While altcoins, of course, are all over the place. Many are dancing up a much larger amount if you look at just the last few days, including the 3-day weekend that occurred here in the US. There's been a lot of downswings for many alts, at least within the top 100, but we're seeing the smaller caps doing a similar pattern. But today I thought it would be a good idea to just do a quick hash of how Ethereum is looking based on a dozen or so of our best leading indicators right now. And there's quite a bit to look through. On the utility side, there's a bit of a concern, and I'll jump into that here momentarily. On the sentiment side, however, it appears as though the crowd is starting to become a little more optimistic and kind of assuming that a turnaround may be near. So we'll jump into that toward the second half of the analysis here, and I will drop links to everything we show so you guys can explore these yourself, especially if you're a pro member. That means you can look at everything in real time, just like I can. If you're not a pro member, remember that you can make a free Santiment account and get a free 2-week trial to explore everything in real time, and then can become a member for as low as $44 a month. So we'll jump into it now, beginning with circulation, one of our most reliable metrics here at Santiment. Generally, the reason we like to regard circulation so high is because of the fact that utility is what pumps assets. Having more unique coins circulating from address to address on a daily basis means there is more justification for prices to push up. If you believe that circulation only happens if everyone is buying or everyone is selling based on some advice you heard somewhere else, understand that that's not the case. Every time there is a buy, that means there is a sell somewhere else. Every time there is a big sell, that means there's a buy somewhere else. Keep in mind that the thing that makes assets churn is simply the overall sum of the amount of transactions going on, especially on the unique address and unique token side, because that means it excludes things like wash trading and gives a real true picture of how much utility is happening on a network and what we can look toward over the next few days, weeks, and months. So hopefully that makes sense. That being said, what we're looking at right now is the past year of circulation for the number 2 asset in crypto, according to market cap, which is Ethereum. We can see, several spikes that have occurred. And we also see a light pink trend line here that is the 7-day moving average. Typically, you'll see the big spikes occur, at least the largest 3. They all occurred within a week after the respective all-time high occurred, beginning way back in February of 2021 when it reached almost 2,000. I think it might have actually gone over. I won't zoom in for the sake of time, but it was right around 2,000 when this all-time high was hit. You notice how about 2-3 days later, we had this huge spike to about 3.08 million. The next big all-time high at that time was in mid-May, getting all the way above 4,300. And about a week after that, we had the most massive spike we've ever had for Ethereum of 3.69 million. And then the actual most recent all-time high, which stands as the current all-time high, occurred on November 10th. And then we had a huge spike on November 15th of 2.8 million tokens. The average that we're sitting at right now is down to, I'll ignore that very last spike because it can be misleading due to an incomplete day, but we're sitting at around 671,000 tokens, unique tokens circulating on the network per day. So knowing that 2.8, 3.69, and 3.08 are achievable tells us just how far down we are from where those really big outliers have occurred. And even when we were in more of a modest range following the big mid-May correction that really polarized the community, once things stabilized, which I marked right around here around June 3rd, we were looking at a circulation of about 1.27 million unique Ethereum tokens per day transacting on the network. We're now down, like I said, to about 674 to 680 or so. And that's a bit of a concern. It means that even though the price, achieved an all-time high back here in November, the circulation has continued to kind of see this downtrend, indicating that we're not quite seeing the amount of utility to justify staying at these price levels. Now, just because we were, way down here at 2,700, it doesn't mean that because circulation is lower, price has to fall all the way down to 2,700 in order to finally get some sort of bounce back. It simply means that utility is starting to dry up, and unless there's some event like a major whale accumulation or purchase, or MVRV becoming overwhelmingly low, implying that prices have to start bouncing up, or sentiment becoming extremely negative. These are the kind of events that can get the price to turn around, even if circulation is staying low. But all things considered, this is one of our most important utility metrics that we look at, and it's not looking so great right now. So we're hoping to see, if you're a bull in crypto, hoping to see a bit of a turnaround, and having a few more modest spikes like this where we're getting just a bit over 1 million Ethereum circulating per day. That's, of course, just an arbitrary number. But we have this horizontal ray marker that we can put now. I can just mark that there. If you look at this at around 1 million, you can see that this is around the time when prices started to bounce again, when it dropped back down in mid-November, November 18th, a week after the all-time high. But circulation was staying above 1 million, and we had that second spike. But then look at how circulation quickly dropped back off. So we're definitely in a concerning time for circulation. We'll leave it at that, and I'll move on to our other utility metric, which is daily active addresses. Now, daily active addresses are looking a little bit better. They simply measure the amount of unique addresses interacting on the network as opposed to the amount of unique tokens that are being circulated. And overall, it's staying kind of flat. Obviously, we had the largest bunch of addresses interacting on the network back in mid-May, when it achieved a price above 4,000 for the first time. But now here at about 3,200, 3,100, it's not really showing anything terribly concerning or amazing. It's kind of just mundane at the moment. Another cutoff point to watch might be around 600,000, which I can mark here. And if I can get it on the nose, there we go. If we get back to around that territory, which was achieved the last time we had our all-time high, our official all-time high, that would be a good sign that things are about to turn around. Don't just look for one spike above. If you start getting a bunch, even just like 3 or more, that's a pretty good sign that that's beginning to look like the new normal. So keep that in mind for active addresses. All other explanations are pretty similar to circulation. More utility is good. Declining utility like this means it'll take a while before a dip buy can actually occur. But look at how, as the price was rising, addresses were interacting more and more back here in late July, and that helped justify and propel the price to continue rising back up. So that's it for utility metrics. Now let's take a look at MVRV, as I just mentioned. MVRV is the average trading returns for traders of the past, in this case, 30 days, but there are multiple time frames you can choose from on Santiment. Right now, we're sitting in a pretty negative range. for those of you who have watched videos in the past, we look for around -15, right about there, and +15, right about there, give or take. Come on. I gotta click it again, my fault. So these are the ranges where we either have historically very concerning topish points or historically very optimistic bottom points. You can see that we just had a bottom indication where the MVRV went below this a week ago, back on the 8th, 9th, 10th, and then look at how the price rebounded back up until the MVRV got back into just kind of a normal negative range. You can see similarly when the MVRV went way down here to the lowest over the past year in mid to late May, prices were able to bounce a little bit until it got into this range again. Then it dropped off until it got into the really heavy, historically justifiable buy zone, and then it bounced up again. So this is what you look for with MVRV. You want to buy when there's a lot of trader pain, aka right here, for example, when the true bottom was hit back in February. And then you want to sell, or at least take profit, when you're going above that danger zone line. We have a model for it. If you look up our MVRV model video that I did recently, it explains clearly how to use that model to your advantage, and it'll automatically quantify how close it is to the danger zone or the opportunity zone. So MVRV right now is sitting at about -10%, give or take, and that's about 2/3 of the way down to the -15% zone. If it gets a little bit closer to it, like it just was last week, that would be your signal that it's justifiable based on history to start accumulating more Ethereum. Overall, though, it's in a better, less risky spot than average because it's below this 0% line. So I wanted to make sure to note that. All right, we'll save the social metrics for last. I want to show you funding rate because it's done some interesting things. We've seen Ethereum start to get into a pattern of some negative funding rates on Binance and for FTX. Negative funding rate means that shorts are actually paying longs in order to short, and they're doing so at a leveraged degree, trying to ride the market down in order to profit. So there is a greater than normal amount of shorts compared to longs, causing the funding rate to go negative. Generally, that is a very good thing. You want to be buying in when the crowd is putting their money on the short side of the equation. Alternatively, you want to avoid when they're putting their money on the long side of the equation too overwhelming, like they were, you know, for a lot of this write-up. And this is kind of an exception, so it doesn't prove my point very well. But I can assure you that when the longs are very heavy on Binance or FTX, I know they're overlapping a bit, that's the time when a top can happen at any moment. And then you'll eventually see something to cause the funding rate to go back down, usually due to a correction, every once in a while due to just some fundamental news. Right now, you know, obviously we're not seeing any candles or spikes that are of significant note compared to what we were seeing back in the early part of last year. But overall, it seems to be a good sign that the funding rate on Binance is starting to go mostly negative. The last time we even saw a positive funding rate for Ethereum was about 2 weeks after the all-time high occurred, and that was a very modest jump into long territory before it very quickly got into this shorting period. So people seem to be shorting to a very small degree right now, and then, you know, the small rise ups end up liquidating them or scaring them away and having them close their positions over and over and over again. This negative spike here back on the 12th was the largest negative spike we saw since July. So that was a big deal. We're looking at almost 6 months since we last saw the crowd shorting this much on Ethereum. So that's interesting to note. Really quickly on FTX, I'll remove Binance here. So FTX was sitting in a pretty positive range, and look at how it was already starting to decline a bit heading into that all-time high. And then the ones who were sticking with longs here, um, they didn't do too hot. They either got liquidated, like I said, or they closed their positions. And eventually we saw some pretty big shorting um, positions, especially this one right here. Look at how there was a short pretty much right on this huge spike down. And then they actually got liquidated themselves after the price jumped back up. So it works both ways. And overall, right now, FTX is just barely in positive range. But with the Binance one being barely in negative range, you can consider funding rate kind of a wash right now. Mean dollar invested age, really quickly, this measures the average age of investments that got into Ethereum and how long they've been sitting dormant in their locations. Right now, it's been a clear line up ever since about 5 days after the all-time high, which is a concern because we tend to see bull runs for any asset when the mean dollar invested age is dropping like this. That means the average age is moving down because a lot of dormant investments and tokens that are kind of just sitting and collecting dust are uh, moving around, staying kind of fresh in new locations, either being bought or sold or moved to a new wallet, what have you. And look at how right here around that May all-time high, things suddenly flattened out. We had the big drop, of course, and then everyone got spooked and dormancy started to prevail once again. And this was interesting because from August to November, there was a big flat period where there was a little bit of volatility and chopping going on. That can be usually a good thing because it means at minimum, the age is not just rising again, it's kind of battling its own self in terms of the average age trying to move back up again. And then we saw, of course, this big one moved right after the all-time high. There was a second wave, and it's been pretty much dormant ever since. So we'll want to look for some sort of flattening period like this again, because that would be a key indicator that things might be pivoting direction and dormant tokens are starting to circulate around a bit. Okay, whales really quickly. We'll take a look at, the best possible whale tier that I think is usually worth looking at, and that would be kind of the 10,000 to 1 million, sometimes even the 10 million. We'll merge these together really quick. It's always a different answer when you ask one of our staff what the best whale tier is to look at, but I kind of like those three tiers together. So we're looking at the tier of 10,000 to 10 million Ethereum addresses and how much of the total supply they're holding at any given moment. This makes up a little over 2/3 of the supply right now. At one point, they were actually over 70%, but they're back to about 69.3% now. Last year at this time, they were at about 67.3, and look at how much they were accumulating going into the then May all-time high, accumulated more confidently even as the price was dropping, and they turned out to be right because the price was able to eventually rebound back, and they were actually starting to take profit beginning right at this initial bottom that occurred in late June. And it's been kind of a profit take fest ever since. It's not a serious profit take. To give a little extra context, here is, we'll just do the last 6 years going all the way up to the beginning of Ethereum. So obviously this is the beginning stage where percentages are going to fluctuate wildly, but beginning, around here, July 2018, it's been mostly an accumulation fest for the 10K to 10 million Ethereum addresses, very flat during the flat period in crypto. And then once it was clear the bull run was starting back in late 2020, that's when the big accumulation was happening. And this profit take right here isn't really a massive one compared to, the accumulation that was going on here. So a bit concerning to see that there isn't much accumulation happening despite this big drop. Usually whales will try to take opportunities like this to accumulate more, but they aren't right now. So we'd call this a slightly to notably bearish indication for the whales. Network realized profit loss can always be interesting. Let me go back into the last 6 months or so. We typically try to look for dips like these as an indication that the network is trading at a loss, which would be an indication that you can buy while others are in a lot of pain. Alternatively, you want to avoid huge spikes like this because this means traders are trading at an immense profit. So right now, we're mostly flat. We've seen a few interesting dips that have occurred, but the last time we really saw a major one was probably here on September 24th, which was very close to the inevitable bottom right before the huge upswing. So beginning on September 24th, if you had bought in right at that negative line, and theoretically you somehow were able to sell right at the all-time high, that would have been about a 68% gain and give or take about a month and a half. So network realized profit loss can be a really powerful indicator. Right now though, sitting mostly flat. Exchange flow balance, similar situation. This measures the difference between inflow and outflow, especially on the inflow side. That's where it starts to get dicey because that means more Ethereum are moving to exchanges with the intent of likely being sold at some point. You also want to look at the big exchange flow outflow days like this that actually occurred right before things dropped off. Usually that's a good sign. It means that tokens are safely being moved into cold wallets in places where they can't easily be sold. But in this case, we've seen a couple exchange outflow spikes, but nothing has really changed yet. We'd want to look not quite at something like this, but at least something that would show like a negative 700,000 spike. That would be a very good sign that things are starting to turn positive again. But right now, mostly flat. Supply on exchanges also looking pretty flat as of late. But overall, the scene looks pretty nice. Obviously, with Ethereum, it can be a bit deceiving because there's so much ETH-based action happening on the DeFi and other various ventures in crypto that can cause people to not necessarily move things off exchanges, but moving them to other opportunities that can allow them to accrue interest on their tokens held, for example, things like that. Overall, though, it's undeniably a good sign that 6 months ago, Ethereum had about 17.05% of their tokens on exchanges, and it's now sitting at about 13.2%. That's a big drop off. So overall, we like this trend a lot, and this is definitely a bullish indicator until we see a big spike that might look like this. All right, now as promised, we'll get into social metrics, and then I'll show you a few other things, and we'll call it a video. So this is the graph for social volume and dominance. Beginning with social volume, we're seeing some spikes indicating that Ethereum is starting to be talked about a lot. This was actually the most that Ethereum has been talked about on a given day since December 12th or 13th or so, a little over a month, call it 5 weeks or so, is the last time we really had this much volume on Ethereum. And it's interesting because it's happening at a time when prices are moving down. And it's, as we'll look at here in a moment, it's definitely indicative of the fact that people are beginning to be fearful that the $3,000 support may not hold. And it seems to be a bit of negativity going on and FUD happening with Ethereum right now related to social volume. Similarly, social dominance is on a pretty nice trajectory. And the latest day saw the highest percentage of discussions related to Ethereum versus the other top 100 market cap assets since very early September. So we're talking about 4 months since we last saw this level of discussion related to Ethereum. That can lead to some polarization. Generally, if the dominance is occurring on a big downswing like we're seeing here, it's a sign that that there could be at least a short turnaround, but not necessarily so. Dominance can be finicky, and usually if there's like a big spike in the positive direction, like we saw in early September, right before the big at that time all-time high, uh, that would be an indication that a correction's coming. It's not quite as reliable if it's happening on a downswing, but in a vacuum, it's a good thing when dominance is spiking as the price is going down because it means there's a lot of panic, therefore people selling at a loss to the opportunists who are ready to drive up the price. Weighted sentiment, let me remove this last day. I usually do this by just clicking on an interval and then going back one day on the end date, and that will show it like so. So on the last full day, we're actually starting to see positive sentiment again, which is interesting. It means that the dominant spikes going on, I know that they were happening today and we're only showing through the 16th right now, so it could be a bit deceiving. The dominance is back in positive territory. So that shows that there's actually a bit of optimism that prices can rise back up. For whatever reason, there is a lot more discussion related to Ethereum than usual happening right now. And this happened about a week after we saw the local bottom that saw Ethereum, I believe, get right below, let me zoom in. I'm curious whether it did fall below 3,000. Yeah, it got to 2949-ish or so on the 10th or so. So a week ago when it was there, look at how the weighted sentiment was back in its most negative territory, really, at least in the last 3 months. Let me look at the last year. Okay, so it was the most negative since mid-May. So you're talking about an 8-month low or an 8-month most negative point for sentiment, which is quite significant. And now it's back in positive territory. Like I said, ignore this final spike. This is the current day, still compiling. But overall, being back in positive territory isn't the greatest. We'd love to see it still in negative, but this is mostly a neutral signal right now because it's not in any sort of positive or serious negative sentiment area at the moment. All right, so that's a little bit on social. Really quickly, I'll show you a few custom metrics as well. Average MVRV is an interesting one. Instead of looking at just the 30-day MVRV, we're looking at the combination of 1, 7, 30, 90, 180, and 365, blending them all together to give us an average to see how both the short-term, midterm, all of the short-term, midterm, and long-term traders are doing together. And right now, they're trading at a loss still, which is a good sign. This is about the fourth-ish most low it's been in the past year. And generally, when it gets super low, just like we saw with the 30-day MVRV, that's when the rises tend to occur. Saw one here, saw one here. We even saw a mini one that happened just last week, right here. And now we're still in negative range. We're not quite back to where we were a week ago, but we're close to what would be an arbitrary danger zone. I won't bother drawing it out, but generally, I'll just draw this line right here, I guess. Generally, right around the negative 0.1 standard deviation line is the point where things are very, very likely to bounce at least a bit to get the MVRV back to a more normal negative or neutral point. Active addresses divided by price. This is kind of a divergence metric where if active addresses stay flat, which they kind of are right now, but prices fall, it's going to push the divergence a little bit up to indicate that there's some bullish indication going on. It's not nearly where it was back in June, and definitely not where it was at the beginning of last year when these price rises tend to occur. Also notice how when it gets low relative to recent times, that's when corrections tend to occur. So I don't necessarily like to compare, the DAA versus price divergence to what it looked like a year ago. Just compare what it looked like to a couple weeks ago. And overall, we're seeing a nice rise. So this is definitely a bullish indication on the DAA side. Even though DAA isn't really moving up right now, it's not falling off a cliff either, but price kind of has. And that's why this is kind of an optimistic metric right here. Positive versus negative sentiment. This will be the last one I show. This is essentially taking out weighted sentiment, the social volume end of weighted sentiment, and just looking at the raw positive versus negative comments that we scrape on Santiment to give an overall score of just how euphoric or just how fearful people are. And right now, we're actually seeing an interesting spike, the largest spike in positive versus negative sentiment since late October. So we're talking about a 3-month high or so since the last time we got this positive. It doesn't necessarily factor in things like social volume, so take this with a grain of salt, but it appears as though there's some talk that this is the dip to buy. And we'll see whether that comes to fruition. It isn't a huge spike. We've seen 5, 6, or 7 spikes that have been bigger over the past year. But this is like I said, a 3-month high is something to pay attention to. And this could be an indication that people are getting a little too euphoric prematurely. Um, you'll typically want to see something more like this, which of course we did have that bounce happen right when it happened. But all things considered, this would be kind of a semi-bearish indicator right now. All right, that said, we definitely appreciate all of the support and love that we've been getting on our This Week in Crypto calls and these videos. We very much encourage you guys to give us ideas for videos to record. We value what you have in mind and what kinds of metrics or assets that you'd like us to look at a bit more comprehensively. So keep those going. Remember that you all have a generate referral link button in your account settings. Just click on your avatar. You'll see a referral link button, click on that, and it'll give you a link that you can basically just attach to any Santiment link. If someone clicks on that and becomes a member, you get 25 to 35% of that membership cost that they paid. So we like to give back. Highly encourage you guys to take advantage of that. And just let us know what you think about everything. We're here to create the perfect platform for you that you can jump onto and get a nice glimpse of how the markets are doing. Whether or not I'm here to give you a nice 10 to 20 minute video about Ethereum or any other asset. So keep that in mind. Hope you're all doing great, and I look forward to chatting with you in a few days on Friday. Talk to y'all soon.